It's all about money at the HouseStreet.com Money Expo 2010. See Garth Turner, Michael Levy, Ross Clark, David Skarica, David Smith, and David Morgan. To attend free, pre-register now at HouseStreet.com. That's HOWE Street.com.
Our guest here on the Money and Wealth Show this week is Garth Turner. Now, Garth, all week long on the commercial for this show, you've been telling people that $2,000 gold and $200 oil is coming, you bet. So why and when?
Well, there's a lot of money sloshing around the world. And as interest rates go up, bonds are going to come down. So the great bond rally we've had is over, finished, kaput. Okay, so trillions will come out of bonds, floating around looking for places to go. And I think it's going to go into the equity market, but I think really it's going to stream into commodities. Commodities look like a good inflationary, safe place, safe haven right now for money. And not only that, as the world starts to expand, particularly in China and India, with growth coming back, the demand for energy is going to rise exponentially. And then we have peak oil over the horizon. So there's only so much of this stuff. I think that this is all of this money slopping around is going to go into commodities. I think gold is going to go back to the $1,200 mark. It's going to surpass that. I think 2,000 is probably in the cards. I don't know when, sometime in the next year. And then oil, I think, is just going to the moon. I think it's going to $100, 150, 200. Again, this may take a few years. It's going to be very interesting, very good for the Canadian stock market, very good for our resource-based economy. Our dollar is going to par, or $1.10 or $1.20, so you can go down to Arizona and buy that nice condo, right? Cheap. Go be a Canadian vulture, fly in. So I think there's a lot of really interesting things there for people over the horizon.
Okay, well, I don't know how well I'll function in the desert, but it's a tantalizing thought.
You'll last longer. You won't dry out as much.
Apparently, that's the story. I wanted to talk also about interest rates, because as you've mentioned a couple of times in this conversation already, we're at historical low interest rates. How long can they stay? With the Bank of Canada just a few days ago said we're going to stand pat for another quarter.
Yeah.
How long can this go on?
Oh, I think it'll go on until the summer. Mark Carney, the governor of the Bank of Canada, has staked a lot of his rep on this. So I think we're going to see, June, July, we maybe start seeing the increases. The question is, how much is he going to go up? Is he going to give us a full point increase right now to say, okay, guys, here, I'm taking the punch bowl away, it's done? Or will it be a quarter point incremental? I'm not sure what the strategy is yet, and I don't think he knows that yet. But definitely, if I had a variable rate mortgage now, or short-term mortgage, I'd gamble for a few months, have a few months cheap payments, but man, I'd be locking in, because I think absolutely no question, if we did this show a year from now, we'd have a prime rate of a couple points higher. Would
you be so keen to lock in and pay even an extra portion of a point to go for a 10-year lock-in?
No, I wouldn't, because I think that the economy actually is going to soften again in a few years. I don't think we've solved any of the problems.
So 5 would be the outside.
Yeah, I think that's it. And right now you can still negotiate a pretty good deal with the banks. You can get 4% range for 5 years. I mean, that's pretty good money. So I would probably do that. Paying the extra premium for 7 or 10 years, no, I think it's wasted money.
You have advised, don't get a reverse mortgage unless you hate your children.
Yeah, it's good.
So, I mean, there are commercials for this stuff all over the place, and it looks like a pretty sweet deal. What have you got against reverse mortgages?
Well, listen, if you're destitute and you got a house and you're over 60 and there's nowhere else you can get money, go ahead, open up your veins and they'll give you money. But the problem with a reverse mortgage is, if you take 30% of the value of your home, you have to pay it back. It's a reverse mortgage. Interest accumulates on the mortgage just as fast as it does on a conventional mortgage. Unlike, say, a simple loan, this is amortized, right?
Right.
So interest builds quite quickly. So therefore, if you never need to pay a reverse mortgage off until you sell your home or until you die.
Right.
And most people, because the interest builds up, they leave this and let their estate handle it. So if you've had a reverse mortgage in place for 5 or 10 years, you might borrow $30,000 and end up owing $80,000. And so your estate is going to have to pay that off. So I say it's a wonderful strategy if you hate your children, because they got to deal with it.
In one of this, in the new book, and we should do this again because I know you like it.
You can never do that too often.
Money Road, the new book from Garth Turner, Tools for the Wild Ride Ahead. One of the issues that we're all going to have to deal with is escalating costs of living. Not only have housing prices in British Columbia gone up like crazy, but so have groceries and gasoline and all those other things. And if you're just getting by, week to week, month to month, your net pay barely keeps your head above water. How do you cope with the continuing cost of living increases versus your zero increases at the paycheck level?
Yeah, well, you have to be aggressive about investing. Interest rates are going to go up, but only a little bit and incrementally. So if you have interest-bearing investments, forget it. Taxes are going up, so your disposable income is going down.
Sure.
Gas prices and energy are going up, your disposable income is going down. The only real defense is to invest aggressively, to try and get some liquidity, try and get money out of your real estate, try and find other ways, and invest it in the things we've talked about in the show.
So now we're back to commodities.
Yeah, commodities, energy, healthcare stocks, financial stocks. There's a lot of stuff. Exchange-traded funds that invest in gold or oil or financials, for example, would be good choices. So there are things there, but don't be afraid of the markets. Don't be afraid. The biggest risk people face is not losing money in a bad investment. It's actually running out of money with life expectancy extending so far. So today what people really need is liquidity, and they're going to have to get that through growth.
Garth, you're going to be speaking back in BC again in February and March in Nanaimo, Victoria, Langley, and Kelowna as one of the presenters at the Money Expo series. What are you going to talk about?
Well, I'm not sure, because we'll see where we're at. Because when I give a presentation, I try and make sure it's current to like that day. So people have a real good rooting in the reality of where we're at. I'm going to talk about the themes we've chatted about here today, where we're going in the next number of years, what's in the book, the tools that people ought to be learning to enable them to talk to their financial advisor and make their own decisions. But we're looking at a very volatile number of years, without a doubt. And they are going to be wild. And I think people who think that we're all back to normal now, they need to come to these money shows, because they're going to have their eyes open as to exactly where we're going in terms of the markets and commodities and all this stuff. It is essential that they be there.
And if you are a participant or a guest at the Money Expo shows coming up in those cities I've just identified, Mr. Turner will have his brand new book, Money Road, along with him, and he'll be happy to sign a copy for you if you pick it up at the show.
Absolutely, and my pleasure indeed.
All right. Garth, one very quick last question, because I know you're a busy guy and you have to dash. British Columbia and British Columbians, we tend to think of ourselves a little different from the rest of Canada for geographical and other reasons. So with that in mind, what's unique to British Columbia that we should be a little more aware of as we plot our financial strategies?
Well, I think without a doubt the real estate issue we talked about earlier, but without a doubt it is now the defining characteristic of British Columbia when we talk about money and personal finance. Without a doubt, it is the most unique place in Canada right now that people here have decided to put almost all of their financial fortunes in one basket alone. And I hear so many excuses for that. It's different here, you know. Rich Chinese immigrants are going to come in. There's mountains over here and water over here. There's only so much land, and all the boomers from Ontario, they all really want to move here, right? So there's no end of reasons, but for each of those, there's a countering argument. I think that anytime people take all of their resources and put them in one place, they are gambling far more than they think. So I would say, to the people of British Columbia watching this show who have made that decision, I think you really should be careful and assess it. Everybody should diversify to minimize their risk. I don't care where you are and what you invest in, but here in BC, this is delusion.
It's still a pretty special place to live, and we're glad you decided to pay us a visit again.
Is it different here?
Well, of course it is. It's better, too.
Yeah.
Our guest, Garth Turner, on the Money and Wealth Show. Thanks for being with us.
Pleasure, Sterling.